Good morning, everyone. Welcome to Admiral Markets at our live trading room. We're going to start now and look at the Forex market and see what kind of situation we have going on there. Of course, later on today we have FOMC, so that's going to be a very interesting event, news event, and that will certainly have its impact. We're going to talk about that and how the dollar is situated right now and what maybe the FOMC can do with the dollar or impact the dollar in just a few minutes. Of course, as you know, before we do that, we have to take a look at this risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar and video recording, if you were to watch the recording, is for educational purposes only. So I thank you for your attention on that. My name is Chris, by the way. This is hosted by Admiral Markets, and we're going to take a look at all kinds of tradings today on Wednesday. Tomorrow, if you like, we are going to take a more focused approach on intraday trading. And Tuesday, of course, yesterday was the swing trading. Tomorrow, we also have an educational webinar, and I think we're going to be talking about trading breakouts, by the way. That's 6 p.m. Central European time or 5 p.m. London. Our primary focus will be trading the breakout strategies, but we'll also be looking for pullbacks. And basically, our focus is always defining the trend, looking for divergence to see if the trend, if there is a trend, is maybe halting. We'll be looking at Fibonacci levels, support and resistance. That is our core mix, if you were. And once we have a trend bias, we will look for pullback, check the filters, and see if there's an opportunity to trade by, for example, choosing a level, confirming, waiting for confirmations, or taking a breakout. All right. Make sure to take a look at Admiral Markets in the social media. And with that said, we're going to take a look at the Forex calendar. But before we do that, I think Michael is with us today.
Good afternoon, everybody. Thank you very much for this lovely introduction, Chris. I will now change everything to my screen. I'm hoping today we can do it finally without any technical problems. Just give me 1 second. And there we are. Once again, my name is Michael Onhoff, and I'm a client relationship manager at Admiral Markets. My job is, in essence, to create the best possible trading environment for you. You can always Google my name to find me on LinkedIn, and you can always email me and reach me on Skype as well. Today I wanted to speak to you about something a little different. Let's take a break from charts, numbers, and currency pairs for just 1 minute. Let's forget for a minute about Japanese candles and Fibonacci lines. Today I wanted to speak to you about something that applies to every single one of us. I wanted to speak to you about self-improvement. Self-improvement and personal growth have been a hot topic for a number of years now, and that is understandable. In this day and age, you must grow and develop yourself on a constant basis. You rely on books, you develop yourself in schools, universities, and you carry on your professional careers. Just like in investment, a price of a future is always worth more than a spot price. And you in the future, you must be smarter and better equipped than you are today. Otherwise, you in the future, well, you don't have much chance, do you? All of you took time today to attend this webinar precisely for this reason, to develop yourself, to learn new things, and tomorrow, after you watch this webinar, you will be smarter than you are today. That's for certain. But I would not advise you to stop there. You have entered a new world, a world of investment, where money is made and lost, a world that is a battlefield for the brightest minds of our generation. Some of you are just considering to enter this new and exciting world. Some of you have taken some steps in order to explore it. Some of you are living and breathing investment. Those of you who are still considering to invest or not, I would like you all to consider the following. Once you enter the world of investment, you will change, and you will never be the same again. You will be better. Not only does investment give you a chance to learn, it also gives you a chance to create yourself a special additional income. But no one can guarantee you a profit or a win. What I can promise you, though, what I can guarantee you is this. First of all, your horizons will broaden. Forex is a demanding investment field. You will be required to follow the news. You will be surprised how much involved in current affairs you will become in just a few weeks. Technical and fundamental analysis will give you information in order to make the correct split-second decisions. Your analytical skills will therefore improve as well. And this is a tool that will help you not only in the financial market, but in all aspects of your everyday life. Decisiveness. Forex trading is all about decision making. A second can separate a profit from a loss, and you will learn this skill. You will be the one calling the odds. You will take this skill from the financial market and you will apply it to everything in your everyday life. After all, isn't life all about decisions too? You will see for yourself. It will no longer take you a few minutes to choose a meal in a new restaurant, and this is just the beginning. But most importantly, one day you will take a loss. It will happen, and once it happens, you will learn the most important skill, self-discipline. Believe me, money is a great motivator, one of the best motivators there is. And it will teach you that a profit is not a product of luck. It's a product of hard work and dedication. Those of you who invest regularly will agree with me. Investment is definitely a trip worth taking. Mark my words, register a real account today and make your first trade and see what happens. In a year, you will be able to look at yourself and you will understand. It was not just a financial affair. It was a great learning experience. Some of you will make a loss. Some of you will make big profits, and as a lot of traders do, your lecture today actually is a great example, but all of you, 100% of those who enter the world of investment and forex trading will be a better person. Knowledgeable, decisive, and disciplined. Guaranteed. If I could buy a derivative on you, I would long you all in a minute, because I'm pretty sure you will be a lot smarter than you are today in the future. It's been Mikhail Orokhov. Thank you very much for listening. I will now pass the microphone back to Chris, who will keep on with the rest of the webinar. Thank you very much for your attention.
Thank you so much, Mikhail. Very interesting, as always, the explanations here from Mikhail, and definitely true that investments in yourself, in ourselves, very important for the future development. So glad that you chose to be here with that path, and we're going to take a look actually how we can improve as traders by looking and analyzing the market, and we're going to be using those concepts we use in the educational webinars and applying that to real-life trading. So that's a very important process in becoming a better trader. We have pound MPC meeting minutes in 1 hour 40 minutes, and then of course use the FOMC statement. Interest rate announcement, well, that's not as interesting as the FOMC, because the real question is to taper or not to taper, and that will definitely impact the market. How? That we will see with price, because price will reflects the psychology and the interpretation of the market in general. So we will find out soon enough, to be exact 11 hours from now. But in my humble opinion, what I would think of fundamentals, I would say that looking at what the FOMC has been kind of communicating is slow turnaround on it, to taper a bit, to slow down the quantitative easing process, and that could kick in maybe this time. That's something that I would expect. Let's see if it happens. Now, at the moment, I think 85 billion is being purchased, and maybe I think the consensus of the market is that the tapering will decrease, or the quantitative easing will decrease by 10 billion to 75 billion, from 85 to 75. And let's see if that will indeed happen, or if they keep the current level. I don't think there will be an increase, but who knows? If they keep the current level, though, I think, looking at the current setup, there are some politicians getting a bit worried about the long-term effect of a lot of quantitative easing. That's point one. Point two is maybe that Bernanke is leaving. Maybe he wants to set already a policy for the future by decreasing the tapering. And of course, the previous communications that tapering could happen. So we'll see if tapering happens or not. I mean, I'm not saying it will. If I had to choose one side or another, I would say probably yes, but you know, it's all up for grabs. Anyhow, with regard to the dollar, because that of course is going to heavily influence the dollar, so I suggest let's start a look and take a look with the dollar index. Now we know from our analysis yesterday, first of all, that the euro dollar, pound dollar are all at resistance levels, right? We know that the euro dollar is at a 786 fib. We know that the pound is close to the 786 fib. So it's at a bounce or break spot in any case. That's the euro and pound. The dollar index reflects the same, not so surprisingly. Basically, I got a lot of lines here, but what it all boils down to is focus on the green lines first of all. Basically what that is just weekly support. Wait 1 second. Let me put these channel properties only on the 4-hour chart here. Good. Back to the week chart. Basically what the green lines are weekly support lines, right? So prices bounced off that already a few weeks ago, went to the 50 fib, got rejected at the 50 fib, and now is back at that same line, back at the same weekly support that we used last time to bounce up. So this is a potential bouncing spot. It could be a hook back, bounce, hook back, move up all the way to the top of the range, which would mean dollar strength, right? If this were not to be a bouncing, I mean, this is always a potential bouncing spot, but if it doesn't bounce and the FOMC would drive price through that green trend line and maybe the potential support of the weekly, then you know, we may be inching a bit more forward to the downside, and we'll see a bit more dollar weakness. I do think that although there could be dollar weakness, I do think there's still some potential support at this green line, right? And maybe at the minus 272 target. So dollar downside could already bump into support pretty fast, pretty soon. Potential, right? The dollar bounce trade would have, in my opinion, a lot more space to the upside. So time will tell, of course, which will happen, bounce or break. Obviously, I would like to bounce to the upside more as a trader. Why? Because we have weekly support here. We have space to the upside. So those are two good reasons. And the only thing we need is a turnaround on the smaller time frames to align and line themselves up with that long-term trend. And you know, I think things would move a lot faster than if we get the break. If we get the break, obviously we'll get some momentum. We might have some good trades to the downside on dollar weakness. The euro dollar might break the tops. The pound dollar might break the 160, and we could see moves up to 140 and 163, 165. But you know, you're talking about maybe a few hundred pips. While if we get a bounce, we could be talking, in theory, on the pound about thousands rather than hundreds. So in theory, right? You never know. So that's why I would like to bounce a bit more, but let's see if that happens or not. So that's the quick overview on the dollar index. And the FOMC could be a non-event. 4 weeks ago, I remember it, nothing really happened. Let's see, this time around, I do expect a bit more fireworks. And, you know, with the FOMC, we have to see also how it settles down, because it could be a huge spike up and down, and we have to see how it settles, how the dust settles, and see if then we can get a sustainable move as well, of course. Now, regarding trading, it depends on how you trade. If you trade using long-term time frames, that's okay, as long as your stop loss incorporates maybe the volatility, potential volatility. If you're scalping, it would be probably better to stop a few hours before that. If you're intraday trading as well, if you're swing trading, probably you'll have to stop. I would, well, depending on which time frame and depending on your risk appetite. Now, I'm a bit more conservative with that. So if your average trade takes 12 hours to develop, then I wouldn't take a trade within 10 to 12 hours before FOMC. I would like to have the average time of my trade finished before the FOMC is announced. So whatever your average time is, and hopefully you do know that, because not only should you have statistics, in my opinion, on the chances of your trade developing, your reward to risk, but I think also important is actually how long a trade takes to develop and when you should be wary that the trade is taking too long. Those statistics are very important. Not many traders focus on it or think it's relevant, sorry. I think it is very relevant personally, but I'm sure there are traders who do fine without it, but I think it does give me an edge. But anyhow, in cases like today, it does help to have that. All right. I see some questions here. I didn't have the question box open yet. I will take a look at that in just a second. Okay. So that's just my vision on, when from a technical point of view, I'm not a news trader. Maybe you are. If you're a news trader, that's great. Then you're looking forward to this. If you're a technical analysis trader, you're probably, just like myself, annoyed that something is disturbing trading and looking forward to having that news event over with and moving on with technical analysis. Until that moment, us technical analysis traders have to be a bit more cautious, and when we get closer and closer to that event, the cautiousness increases, and when the news event is over, we get volatility, we let it settle, and then we continue with our technical analysis. So we kind of try to avoid the potential disturbance there, and news traders love that disturbance because that's their heyday. That's when they trade the most. That's when they focus on. For us, it's just kind of annoying. What can you do? All right, we got a question about the New Zealand dollar. We'll take a look at that. Well, I kind of already mentioned my view with the dollar, but if the tapering will happen, then I would expect dollar strength in general. As far as I understand, I'm not an expert on this, but if the dollar tapering doesn't happen, then I would expect risk on, which would mean dollar weakness. Regarding, there could be a lot of spikes up and down, regardless of the fact of the news. So even if we got tapering, you could still see, for example, a spike up on the euro dollar, up to the 886 fib. Then the tapering news settles in somehow, and we see weakness. Dollar strength, and we see weakness on the euro dollar to the downside. If, for example, with tapering. If tapering doesn't happen, then, for example, you could see a spike down on the euro dollar and then continuation up. The spikes up and down could be really all ways. That's why I said let's see what the dust settles. But yeah, technically speaking, a move up to the 886 fib on the euro dollar. Let's go to the euro. Let's move on to the euro and pound, in fact. Now, I think there are a lot of I would expect a lot of resistance at the 886 fib. So if we see tapering, then I would expect the euro dollar to at least retrace downside. How much? We'll have to see how the break happens, and we'll discuss that tomorrow. If it's with a lot of strength, we could expect a lot more downside. All right, so that's something we have to check. But I'm expecting resistance here right at the 786 fib, as you know, and 886 fib. So we can see a push up to the 886 fib. I think that could be an interesting breakout trade, by the way. This trend line right in here captures the correction, and we can see a break to the 886 fib, and I actually have a sell limit, as you know, right at the 886 fib. So it would be a short-term trade up to the 886 and a long-term position swing trade at the 886 for that resistance downside. My entry on the 886 level is 134.10, stop loss 134.63, and my take profit is 128.50. It's a 560 pip take profit with a 50 risk, or in other words, 11 to 1. But I do see from a breakout with the trend perspective, we are in this uptrend channel. We respected the 786 fib, but how did we respect it? With the bull flag. If we break that bull flag, we still have space up to the 786 fib, 886 fib, excuse me. So that's a small area we could capitalize on as with the trend momentum breakout traders. And if you're a swing trader looking for levels, then you would be more interested in 886. So there are two trade ideas right there, depending on what type of trade you're looking for. So let's take a look at that breakout trade. That's the trend line, and it captures a pretty good trend line. We have a bit of price peeking through it, but that's okay. Got multiple hits. So that could be an interesting breakout trade. Let me punch in that trade actually. Right now. Just hang on and give me just a minute to do that, okay? So I would be looking to enter at 2 pips above that high and the stop loss opposite side of the 50-minute fractal. And I would target the 886, but I'll go just a few pips below there. The 886 fib is in fact at 134.14, so I'll just go a bit below at 134.04, for example, or 134.05. Make it an even 40 pipper. So that's the idea. Let's see if the price is right at the bouncing spot here right now. So let's see if we get the bounce or not. If it were to break this level, I would have to delete the order because then we're going through the stop loss level at the moment. So obviously the stop loss level is right below the 50-minute fractal, but if the price were to break through that 50-minute fractal, then the stop loss level doesn't make sense anymore. It would have no value anymore, and I would delete the order and see if we get a turn lower, and that would see if a new trade with a new stop loss below the new fractal would make sense. I forget that these lines are not working. I still have to fix that, so I have to just punch it in myself here. Yeah, we got a pound news announcement, by the way, pretty soon from here. So that's something we want to be very careful with the pound dollar. But even the euro could be impacted by that, although substantially less, of course, than a pound. So the pound would be a bit more difficult probably to trade before that announcement. It was pretty significant indeed. What was it? It's the MPC mid-minutes in 1 hour 20. So got to be careful of that. We'll keep an eye on this if that makes sense to keep this trade when we approach that 1 hour 20 minutes from now. On this particular trade, I'm not taking much risk as well because of that. That's another factor. but it looks like a good breakout trade to me. Technically speaking, it's just a great setup for that breakout with the trend. Obviously, it is still an uptrend, but we are at resistance. Doesn't mean that we cannot make that last move up to the next resistance though, right? Especially if you look at the chart pattern and the structure of the market, all right? Which is an uptrend and has been correcting sideways, which indicates there's no downwards momentum, and if anything, the break has a high chance of succeeding because we're in an uptrend. We have upward momentum. We have a pullback which is going sideways, which indicates that there's no strength to the downside, and a breakout would be aligned with that, right? So all green stuff there. We have a lot of breakout trades, in fact, today, and I made a list of that. It's just a tremendous list, huge list. So we've got a lot of things to look at. So let's keep an eye on the $0. Let's move on. I'm not going to talk more about this. Pound dollar is indeed a bit different because it's a bit riskier, but with the news event. But here too, it seems we're getting a bit of a bounce, maybe at the bottom of our trend channel. If we just adjusted a bit slightly, maybe like this, to incorporate these touches here, it's possible as well. Something like that. So here too, if we zoom into the 50-minute world, wow, we couldn't break that that level. We were talking about that level. I had a blue line here, remember, saying if it breaks there, it could be interesting to the upside. It never broke it. That I think was yesterday was the H4 probably. Not 100% sure there. If you know, let me know. But here too, looking at a potential breakout on the pound as we speak, and we actually broke through that trend line already. But this is the one that I would not take because the pound is pretty spiky at this time of day. Yes, I'm still in that pound yen indeed. I'll show you that trade that I'm in. How that's set up at the moment. So this one I wouldn't, but it broke already, in fact. Kind of broke, pull back. Let's see if we get the continuation or not. This too, though, technically would seem set up for a move up to the 160, which is the 786 fib, which would also be, it's the exact same story. I don't want to bore you here. Basically, uptrend, up momentum, up channel even, because the uptrend is on a day chart or 4 hour, the up channel is on a 1 hour, right? So everything is green here. We are breaking out and to the upside. So everything is aligned here. Do you see that? So in theory, this is just one of the best things you can actually have if everything is, configured in the same direction like this. But unfortunately, the pound, we have that MPC, so I'd rather take the euro. But technically speaking, if we didn't have that news event, there's a high chance of getting to the next resistance, which is 160. Right? Same story as the euro, basically. So in that case, let's move on to pound Swissy. That, unfortunately, is also going to be influenced by the pound news event. But otherwise, this one, too, I would say, is technically speaking, nicely positioned for this upside break. Yesterday, I talked about the fact that downside reversal would be good if we were to break below 147, remember? Because then we would be breaking this channel, and we would have that correction reversal trade back to the long-term moving average. Price didn't break through it. It didn't manage to reverse, basically, and found support, not surprisingly, at the bottom of that channel, which maybe would have been an interesting idea. In fact, I didn't think about it. I was more keen on the reversal trade there. But we did bounce off the bottom, found support within that uptrend, within the uptrend channel, and we're not able to reach that zone, which is good because we didn't take that reversal trade, and in fact has gone, corrected sideways very choppily. So if we do break this trend line here too, we would have a with the trend breakout trade. Usually would be a very interesting setup. Let's take a look at something else. We've got a lot of yen things, yen breakouts as well, but the New Zealand dollar is one of them as well. So I got a request for your New Zealand dollar, so I'll gladly continue with that one right now. There was a gap indeed, but the gaps don't always get filled. Also, the gap does depend. The gaps are not always going to be equal, depending on factors of when price is viewed on the chart. It will not be equal among us all. Just like candlesticks are not universal, they're not always the same for all traders on the world because of opening and closing times and stuff like that. Usually, gaps eventually get filled. If they don't get filled within the first few hours, then their importance is decreasing. Though I don't focus on gap trading, and really I'm not bothered if there is a gap recently, because I know that price can continue for a way long time before eventually they do probably get filled. So I never really get distracted, let me say it, from that. There was a gap indeed here, about, just like all of them, about 60 pips. Got filled almost entirely, I would say, about 15 pips remaining here. A very small gap still, technically from open to close, because we opened here at close at 81.38. So with that said, obviously we broke the resistance, and I in fact broke with a gap and hooked back and bounced, right? So if we move to the day chart, where would be the next resistance? Well, in fact, I would say pretty far from here. All right, unless it's a fib, we can put a fib on the downside. Potential resistance could be the 618, right? Something we should be aware of. So we'll put a red line there as well. But anyhow, that's still away from here. So let's move on. Resistance is far away. We've established that we're in an uptrend, we're in an up momentum, and we've broken resistance here. We talked about up trades from here, but we didn't want to take it too close to resistance, right? So we took it from the confirmation spots, although we even talked about the trade idea all the way from the bouncing area, right? So you can see how all that pieces together, really. The bounce trade, and then the breakout with the trend continuations in the middle, and then the filters at the top because we're too close to resistance. Now we broke resistance. It's a different story. We have to reanalyze and see where the next resistances are, and we have done that. So let's move on to the 4-hour chart again. And we looked at this already. We're in an uptrend. 1-hour chart has a great uptrend channel, and in fact, I missed maybe a trade yesterday with, for example, this breakout. I didn't look at the 15-minute chart. I was only looking at this 1-hour chart right in here. But I did take that break, by the way. But we could have maybe even looked at this break here, right in here. Didn't think about that at the time. Sometimes you miss some things that, if you look at many currencies, could have been a good break as well. But I did take this break, what I was talking about in this session. And actually, that was a break-even trade for me because that missed my take profit by 7 pips, by the way. It couldn't break the 50 number, and I had my take profit just above the 50 number. Oh, well. So what we do have left here at the moment, those were breakout trades, in fact, from yesterday, right? Here and here, potential ones. What we do have now is a hook back. So if we put a fib on this up move on the 1-hour chart, because we can see we're in a very nice channel, we can keep moving in that channel. And any of these fibs could be bouncing spots for more upside. If you have if you have a target at 82.72, I think that with the next push up, it should hit that because the 272 of that fib is at 82.74. So if the fib gets respected here and we get a bounce off the 50 or 83.82, we should go to that 272 target. Yes, I also expected a bit more push here. In fact, once it broke, I was aiming for a 2-to-1 reward to risk. In fact, I took it off 50-minute chart, and I took an entry here with a stop loss here, and I was looking for a 2-to-1 trade. Looked pretty good, but really it stopped just before that 2-to-1, so it was a shame. But what can you do? Now, in fact, if we look at this 50-minute chart, or maybe it's we have a 5-minute trend line. I'm not too fond of 5-minute breakouts because I tend to think that they're a bit more whipsaw-y kind of character. 1-hour trend lines or 50-minute trend lines do have a bit more robust, or how do you call it, robust, more sturdy. And if they break, there's a tendency of a firm break and not a false breakout. 5-minute, maybe even the 15, you see more ups and downs. So just be aware of that. Not to say that some of them are not good, though, especially on the 15, right? Anyhow, we had a break like that, just an example of a break and then a move down. So maybe if we adjust the trend line a bit like this, if we break that, that could be a good breakout. We already had the 382 bounce. In fact, that could have been already a good entry if you took that trade. Great job. You're already up in pips. But looking like it's going to break out soon, though. So we can keep an eye on that. This is like the euro, in fact. Or it's worth maybe even taking right here, in fact, because it does look good. So I could put a pending order just above here with the stop loss there. That would be the breakout trade, in fact, on this New Zealand dollar. So let me do that right now. Let me see what the level is. Just a few pips above here would be 82.37. Stop loss is 17 approximately. That's 20 pips. Target is 74, as we know, which would be 37. So that's just a bit lower than 2-to-1. Almost 2-to-1. That's good enough for me. Sure thing, Dashang. If anyone wanted to reach me, there's no problem at all. I'll post my email address, and I'll get back to you, okay? Could take maybe a day or two, but if you ever needed to reach me for a question or two, no problem, okay? Now, I'll just wait with that New Zealand dollar because price is actually currently retesting that bottom. All right, so we don't have a 50-minute fractal here yet. So let me see where it bottoms out, and then we'll make a decision then, because otherwise, let's keep an eye on it though. If it moves up, then we know that this is the bottom, and I would be willing to put an entry order here at the breakout, okay? So if anyone, oh, we are moving up now, okay. Let's keep an eye on it then just quickly. Well, I want to move on to a new currency. So let me just punch in the numbers, and if anyone sees, yeah, it is sluggish. But, the sluggish is always an opportunity in a way, because that's when the currency is standing still. Yeah. Because this was the impulse, of course. So the question is, could it break that soon? That's always the risk with the 15-minute breakouts, indeed. Because the 1 hour, well, even the 1 hour correction is not bad, but it could turn into a bigger structure. That's for sure. No, I can imagine, Rashan. It was a shame it didn't push a bit further. It would have been a nice 2-to-1 trade. For breakouts, I always look for 2-to-1, by the way, for those of you who don't know that. because most of the time I got about half of them right. Well, not right, but half of them pan out approximately. So if you get 2 to 1, that's good profit there. On with the trend momentum breakouts. So yeah, that's the question is, the trend channel is aiding it. Let me say it this way. It would give an extra reason why it would break so relatively soon, because if you look at this structure compared to, of course, something like this one was a bit bigger, I should say, although the movement was a bit, I should have used the 50-minute world, in fact. While I was looking at a 1-hour chart, I didn't see the trend line that I liked. I didn't want to cut through this, maybe. But if you compare it to this, for example, that structure is a lot bigger before it broke, right? Although this one was maybe, this one was also pretty big. So that's the debate here, folks. That's basically what it boils down to. Kiwi is pretty strong, though. Looking at the momentum on the Kiwi, the break, pullback, basically break, pullback, continuation, I would expect a bit more continuation still. We can take a look at the Aussie as well. The Aussie usually, of course, on average follows the Kiwi, but of course we also have the odd New Zealand cross which moves, and we know that the odd New Zealand was at a massive downside. So I'll go ahead and punch this one in. Looks like we're getting a bounce right now. So 82.37, which would be the level I'm looking for. Stop loss 82.18. Let's see, the spread here is only about 1.5 to 2 pips. So maybe I should go just a bit higher though. I'll go to 38 because I want to be 1 pip above that top. And that target is 82.72. Now, level traders would have taken the 382 fib, would have done pretty good now, would have picked the bottom, in fact, with the 382. I didn't have a pending order there, but we can take the breakout. I think I'll move the stop loss just a bit higher to 19. Alrighty. That's the Kiwi. Let's keep an eye, see what happens with that. The Aussie, in fact, also is breaking through long-term resistance and, in fact, has a similar setup. The only reason why I like the New Zealand a bit better is, first of all, it broke the resistance with more clarity. Also, technically speaking, if you look at the odd New Zealand, it is at a downtrend, and in fact, it has a good setup for a downside trade. So with that in mind, I'd rather buy the New Zealand dollar because New Zealand, I expect more strength on New Zealand eventually. It doesn't have to be directly now, but eventually. All right, so that's why. Actually, that's also an interesting setup. But let's take a look at the pound yen and the yens because they have interesting setups too. With the pound yen, of course, has the disadvantage that we have the news event. But here, actually, already broke out of that trend line 2 or the very big triangle indicated by these black lines. That's what we have right now. In fact, as you can see, I took a buy yesterday. Let's see where that was. It's actually quite choppy at the moment. and I'll probably consider moving it just to break even, or maybe reduce the risk a bit. Anyhow, it's a small stop loss, not much risk on it, so might as well leave it maybe on. But because the stop loss is currently right underneath that triangle, so if it were to break up, that's great. You can see that miss might take profit just by a few pips here, by 8 pips in fact. The blue line is the TP, the green line is the entry, the red line is the stop loss. Despite the small range that I was aiming for, it still didn't manage to go up there, which is funny because it's just been so sideways. Didn't expect that much of a sideways movement either here, as you can imagine. So let me retrace where actually the trade was taken. Not too sure what the idea was. Oh yeah, it was here, right? Wasn't it? We got a bounce. Oh, I took it here. That's what it was. We were talking about taking the trade here, but then I said don't take it here because of the news event. We got an exaggerated move down, right back to support. I was thinking about taking it here, but I was occupied with something else. Didn't see that it bounced. Would have maybe taken it here, in fact, the scalping trade, but then took it upon the break of that zone. In fact, I took it upon the hook back here. I saw the break. I took it on the hook back. It almost retested my stop loss, put the stop loss right below here, and in fact has been bouncing up and down just above the entry ever since. So that was the idea. Didn't see this, but took it upon the break, hook back, went a bit further than I thought, and has been in positive territory ever since, but just failed to really go to that blue line. And in fact, we've broken ever since then. We've made this triangle, and we're about to break, or we actually broke. This is maybe a hook back. Let's see if we get the continuation. All right, so technically speaking, it could be a bouncing spot, but it has the pound in it. So let's move on to the euro-yen. And that's one of the things you can really do nicely with the pound yen is also scalp it, because a trade like this, you can have a few pips stop loss, and you could hit a 5-to-1 there, really, if you take a trade right in there with the stop loss there. Anyhow, euro yen. That was the bull flag we were looking at yesterday, but the thing is with the dollar yen is euro yen, excuse me, is that it's just not also really not going that far as yet. If you look at the purple line, the triangle we had here, we broke out, hooked back, and continued, but we're going sideways ever since. So usually speaking, a sideways zone like that has this probability for continuation. You never know, though. So we'll have to see how this box or triangle works out. Obviously, if we break that triangle to the upside, we should have some good breakout trade to the upside. Again, yet another breakout trade. If it breaks to the downside, could even be a good reversal trade. But you know, you never know with those reversals. Let me say it this way: less likely. Darshan took 157.55. Great trading. That was a perfect pick there, Darshan. Excellent. Awesome job. And really proud of you. That was great trading. Really, really good. Right at that turning spot. Or I don't know where you took it, but probably, or maybe even the hook back here. Not sure, but anyhow. Good trading because Darshan took the bounce off the trend line. Very, very nice. Moving back to the EJ, so preferably with the trend. Personally, if you like to trade the EJ and it's the only thing you trade, then you probably know better than I if that would be a good trade. But because I don't focus on the EJ specifically, but to me, still, you know, it looks like a break on the higher time frame, 4-hour break, pullback, continuation. All right. Let's see if we get the break. The odd yen, or the New Zealand yen, in fact, both have similar setups. New Zealand yen also kind of like the New Zealand dollar. in its structure. So they are in a way similar. You have to be careful that, not to take, as always, the risk management is something you have to be aware of yourself, of course, and make sure that if you take multiple trades, not to over risk in total, right? Whatever those parameters are for yourself that you have, compiled or written in your trading and risk management plan. So with that said, the Aussie yen, let me take a look. Just a bit confused here. We got a good break of this purple trend line, right? That's on the daily chart. We're getting a small hook back. Okay, that was the break. Getting a small hook back down back to the band. We got to bounce off that band. So let me zoom into the 1 hour chart now. What was the idea? Oh yeah, the idea was this. This trend line right in here. I took that strike yesterday, in fact. This breakout trade, okay? I call it strike because that's just my word for a breakout trade. It's an easier word, that's why. Usually I say breakout to you, but the trade unfortunately missed. Yesterday I was a bit unlucky, really missed me by, this was 12 pips. I had it just above the 93 level. I had it 93.08 was the 2-to-1, went to 92.96. So what can you do? Those are one of those days, that just, it's not, lucky in that regard. So the breakout I took right in here and had the stop loss below here, in fact, right? That's why the 2-to-1 was just missed. Yes, that's a good one, Darshan, indeed. With the strike, I mean, I see the option of exercising the plan, indeed. Well formulated. So here, too, when we have a strike, we have the opportunity for pullback and bounce. This actually would happen already, right? If you fib it. We missed the 50 fib by just a few pips, and got the bounce right now. So here, actually, I don't see anything to trade right now, though, because in fact, we had a break, pullback. We're actually on the way to continue, but wouldn't want to take that continued trade right at the resistance, right at that top here. So on the Aussie yen, I don't see anything at the moment. I would rather probably focus on the others because it's just, I don't see a method to enter right now. If anything, we're right at a top, that doesn't make sense. Either we need a pullback here, so in a renewed attempt, we could get a trend line like that with 3 hits. That would meet our qualifications for a breakout. Or we would need a pullback, a deeper pullback to the 50 or 618. That would make sense. The other way would be if we do break above this level, maybe get a mini pullback, and then we would take the next break or that pullback. That could work as well. Right now, we need a break. Basically, we need either a bigger consolidation period or a move back to fib. One of the three, really. All right, in my opinion. So I'll move on to something else. I'm just taking a look which one. I have a list ready here. 1 second. What a dollar yen. Let's just quickly go through all the yens in this case. Yeah, the dollar yen also broke out, but it didn't break with a lot of power. So maybe the next break would be a bit better if we break out of this black trend line here, for example. I did take this breakout, but it really led nowhere. So what can you do? Those are one of those things. Usually speaking, if you have a trend, the breakout is active, which means that there is enough momentum. Not always is that, of course, the case. There are some exceptions where even with the trend breakouts, just get some momentum and just get poof, passive and do nothing. There's really, in those cases, little we can do, except maybe take it off here if you would have had a TP there at break even. There's little things we can do for that. One thing, though, that this usually happens more often if you take breakouts counter trend. So if your trend line is steep and the currency breaks out of that, then a passive breakout happens more. The passive breakout happens statistically more often with a counter trend breakout or a steep trend line breakout than if you have a shallow trend line and the breakout is with the trend. There's a big difference there. All right, so usually this doesn't happen often, but in the case of the dollar yen, fortunately it did. And there was not enough power here, although we were right at the bottom of the trend channel. In my opinion, once again, it's my opinion, maybe others don't see it that way, and that's why I didn't get enough power to continue here. Who knows? In any case, I'm still in that trade and hoping for a bounce and continue a break and continue up to that target. So that's the yen, basically pending breakouts on the yens. New Zealand is pushing up, hasn't reached that entry yet. Euro dollar is still bouncing within that very tight range, hasn't taken us or me in as well, still pending that entry order for the break. So I'm glad we have some breakouts setups today. Somehow, in my feeling, most breaks or many breaks happen after our session. Probably that has to do with the fact that the market is just maybe still quiet or setting up in a way in the early hours of the trading London session. Not sure why, but glad we have some breakout situations because I love breakouts. All right, setting up the TP, the take profit, is sometimes a bit of an art in a way, because if you're a scalper or if you're a range trader, the TP is usually a bit clearer. Sometimes, like what happened yesterday with in my case, I missed the TP just by a few pips. That's always a bit annoying, but usually 2-to-1 seems to me like an optimal level there, by the way. Yeah, there were some questions regarding straddles. First of all, I'm not a big straddle fan. So let's take a look at the pound dollar, especially with the pound, but in general, straddles, especially with high impact news, they really could spike up, down, up, down. They can spike up, basically what I'm trying to say is they can spike up multiple times, up and down, and you really could lose twice with news events like that. So that's why I'm not a big fan of those situations. Yeah, it is naughty indeed. Well, if you have good experience with that, Darshan, then who am I to say anything about it? I just never ever focused on it, so that's all I can say is that basically the mainstream advice that it's probably risky, and that's why I never actually focused on it. But if you've had a good experience with that, then I would actually I'm going to write you an email. Tell me how what is your plan for that? Oh, Darshan is saying that if you like to straddle, there's an excellent book regarding that topic from Grace Cheng, C-H-E-N-G. So a good tip there. And apparently this style of trading has good reward to risk, or reward to time, sorry. It's not reward to risk, reward to time, which makes sense because probably it happens fast indeed. So in any case, it's definitely a type of news trading, if you're geared towards that time of the day when you're trading the FMOC. Regarding the pound, indeed, 8 pips, it's actually 8 pips, Darshan, the false break there. don't have any observations regarding the 8 or 9. It doesn't really matter. It's close, but don't have really any key observations regarding news events. Can't remember exactly if that holds true as well. I think for bigger news events, it probably wouldn't count on it. Let me say it this way. It's something that we'll have to see. We'll have to take a look at, because I don't remember exactly. It was a while ago. All right, so you got some advice there from Darshan regarding straddling on news events. But you definitely want to make sure that you have a bit of experience in trading in general first, because I would consider that higher risk and also a bit more experience needed for that. All right. So we had a lot of other breakouts remaining. The odd CAD, let me see if I can pull that one up. Yeah, regarding the news, I am definitely a conservative one, but sometimes I do take a bit of a risk. Often enough, it doesn't work out during those news events, so I get reminded again that that's just not for me, apparently. That's the breakout I'm looking at, in fact, the odd CAD, okay? Basically, we've got a lot of these similar style of trade setups where you got a gap and price hanging as a bell flag, but normally we have price action leading to that, right? Normally you would see price moving up, we got a bull flag, that would be the typical. In today's market, we have many of these where we have a gap and then a bull flag. So it kind of looks funny, doesn't it? But still, you know my opinion that the gap can be filled later, and I do think that the breakout, therefore, still is a good trade. And this is just one of those examples, yet again, of actually a triangle that could be breaking any second here. Triangle or bull flag, it depends how you look at it. Both are valid, in fact. That's the odd CAD. So just an idea for you there. Now, I'm not going to take all the breakout trades personally, but this one looks pretty good, in fact. Well, we're taking in, the New Zealand dollar is in. Well, let's see. It's pushing. Only time will tell. This is, I'm trigger happy, as Tarantula would say, because I'm taking the actual breakout, not waiting for a hook back or so. So I'm a trigger happy trader, as Tarantula says. If you don't want to be a trigger happy trader, then we'll have to see how this breaks out, and maybe wait for a hook back and bounce here, and then taking it in here when you get maybe some price action signal would be a confirmation trade instead of the breakout trade. If you're looking for a scalp, probably taking it off the bounce here for 10 or 15 pips is probably the safest trade, and that's probably the safest scalp as well, if you're just looking for 10, 15 pips. Then a bounce up for 10, 15 pips is very likely. So if you're ever looking for a very secure type of scalp, look for breakout trades. Don't take the breakout, but wait for a pullback and take it upon the pullback for those 10, 15. So, I hope you saw that image here. All right? Because we have to realize that, in fact, a breakout trade, what I'm doing here, it moved up 19 pips on a 5-minute world. So, usually speaking, we do get a few pips retracement. Now, personally, I don't look at that much because I'm aiming for a 2-to-1 swing, kind of swing intraday trade here. So typically I don't bother that much for maximizing the entry by a few pips on a 5-minute chart. For me, the 5-minute chart is the entry trigger. So if it just breaks above it, that's it. That's my entry. Because I'm just taking that breakout trade. And usually I take 1-hour breakout trades. So then, especially then, 5 and 15 is just entry. In this case, maybe I could have done it a bit different in retrospect because it's more like a 50-minute trend line, so I could have been a bit more critical maybe with the entry. Anyhow, the entry is already done. But with the 1 hour specifically, it doesn't, in my opinion, make that much sense because sometimes you get a breakout and it's just a quick continuation. All right, so there's some theory anyhow about breakouts, depending also on the time frame, how precise you want to get with the entries. 1 hour, not so precise. 50-minute world, want to get maybe a bit more precise. Anyhow, let's see. The odd cat is something similar, and in fact, the pound cat, euro cat could have also those trade setups. All right, so let me take a quick look what's happening at the ones we already discussed, and we'll move on to other setups because we do have a long list today, and there are some more left. The New Zealand's, I wanted to still take a look at. I mean, besides the New Zealand dollar, also the other New Zealands, in fact. What else? Yeah, even the CAD yen, for example. I didn't talk about it yet, but that too, also yen pair, but still, that too could be, at a bouncing spot, right? Because we have, in fact, what happened yesterday was our band went back to the long-term moving average. So if we do pull through, we did break out. The only thing is, though, the breakouts yesterday were quite, maybe not as strong as I was hoping for. So we'll have to see if we get the continuation. That's basically what it all boils down to. Sorry. So let's see. Anyhow, it's similar like the others. Let me move on to the New Zealand's, something else. But before I do that, I just want to take a quick look at the euro dollar. Now, euro dollar is actually going through that stop loss level, okay? You see that? So we didn't get the break, so I'm deleting that order because I want that stop loss level is not a technical stop loss level anymore, all right? Does that make sense? We were planning a trade upon the breakout of that 50-minute fractal, the 1 hour trend line. The 1 hour trend line in black, of course, with a stop loss below the opposite 50-minute fractal, aiming for a 2-to-1 trade approximately. Here, in this case, just a bit less because resistance didn't allow the 2-to-1 to set up. Price is now pushing through that level, so that means that stop loss level is not a technical level anymore, technical analysis, technical stop loss level. So I'll have to see, if we get a bounce again right in here for that upside. So I'm deleting it for the moment. So that's off. Pound Swissy is moving to our strike, but the pound has really key level, key news right around the corner, so we can't look at that, unfortunately. Dollar yen is really pushing down. That is unfortunate. Breakout really very weak. Aussie is pushing through. That's good for the New Zealand though, if that were to happen, which is indeed happening. Pound yen isn't getting the follow through at this break. We did have what did I talk about? If you want a scalp that's pretty safe, look for the breakout and pullback. Take it off the bounce of that trend line and go for 10-15 pips. Because even if it doesn't continue, you get the bounce and respect, right? What do we get off the trend line? We got only 10 pips. Yeah, not much. But often enough, even if this breaks, pullbacks, and doesn't continue, often enough we continue. But if we don't continue, we still get a bounce though before we reject down, just like this pound yen has done, right? If we look at the 1 minute chart, you would see that. We got a break, pullback, continue, bigger pullback, bounce, but no continue in fact. And then couldn't break the top, moved down. So really the breakouts unfortunately here not moving all too fast. And the EJ in fact is breaking to the downside. Anyhow, with that said, let's see. Dollar Swissy would be interesting to see if we can break out of this channel. That's going to happen maybe during FOMC because Swissy would have to go up another 30-35 pips before we can see that break. We did bounce off the 786 fib, just like the euro dollar though. Moving on to the New Zealand's, what I'm looking for, or thinking of looking at is, in fact, let me take off this trend line here. In fact, yesterday we broke this channel here, or this bull flag, sorry, bear flag, or triangle, doesn't matter really. We broke it. That was a good break. If you took that trade, great job. I didn't see it happen personally, but the hook back to the band very nicely around the 50 fib. So if you were looking at the charts, this was a good rejection wick off the band and close to the 50 fib. You can use the band sometimes as a stop loss too, by the way. So that was a good move down. Unfortunately, it has already moved it has moved away from the fib in fact. So I'm just a bit too late with looking at this. But it has a similar 15-minute breakout, as you can see, just like the New Zealand dollar. This too, in fact, breaking a 15-minute correction after hitting the fibs. So it's similar to the New Zealand dollar, just the other way around. The odd New Zealand was another one. New Zealand, yesterday we had a good break of this trend line. Now we have this trend line left. All right, so that was a good break, in fact, right there. We're getting a pullback. There is a strong likelihood that that pullback will get, rejection off the fibs for one more continuation, in my opinion, where there's always that probability, let me say it this way, every time we break and pull back. All right, so that was a good break. And we're making now a smaller bear flag as well. All right. Now this bear flag I'm not interested in, the smaller one, because this one, the smaller bear flag, if we break it, we have a bigger support line that needs to be broken right here. That's right around the corner. That's a very small space. I'm not interested in that. I'm interested in trading this bigger one. Right. So let me make the trend line that's actually tradable green. All right. That's the New Zealand. Looks like a pretty good price action signal, though. If you look at, if you look at the 1 hour, set aside the small bull flag, which I think is too small to trade because of that space. But if you look at the price action, you would think that that's a pretty good 1 hour candle off of the 50 fib. So if you're a confirmation trader, then waiting for a retrace of that candle with the small stop loss could make sense, for example. All right, that's some ideas you can have there for trading the confirmation of that candle off the fib if you don't want to take the fib directly. Could make sense, in fact. Thinking about the idea myself. Normally, I don't really take a lot of entries based off of candlestick patterns or formations. I'm not used to that much. What we can do is we even put a fib on this move, and theoretically you could even put an entry order at the 786 with a stop loss there. It's a very small risk. I'm contemplating if I would like to do that. Or if we get a lower high here, there would be a confirmation of that weakness in a way of a lower high, and then wait for the move down, wait for the next hook back about halfway, and that would be approximately probably about the same entry level, but you already have a lower high basically. That's another way of doing that. Waiting first for the lower high because we don't have that yet, even though this is a small time frame. Usually we do get a lower high that's close to retesting this one before really moving down, usually. So I'll think about it. Darshan is saying EJ has a long drop on its way. Well, you do have a point, because if the breakout is so corrective and so shallow, then probably that this is a correction, in fact, and this is more like an ABC. For those of you who like edit waves, that is something how you can kind of measure if something is a B wave or an impulse or with the trend trade, basically, because if this moves so slowly, it's probably a corrective wave. The chances are high indeed. So it could be, in fact, very true. And if you look at the band, we close below the band now. With the close below that chart pattern as well. So makes sense. I'm not too big of a fan even of reversal trades like that, but if there is a reversal trade that could make sense to me, is that potentially to fall. That's true, Darshan. If you look at the 4-hour chart, though, you can see one thing we have to be careful of, though, is that there's a 4-hour band right here. So even though the break was slow, it could still be a hook back for more. That's always the danger of taking reversal breakouts. So really for confirmation of that reversal, a break below these 4-hour support levels is needed, because then we'll be breaking below the band as well. Unfortunately though, when most often the case is, the reversal trades are always riskier, because where's the target, the long-term moving average, or maybe the bottom of this range? The bottom of the range would have sufficient room, but the long-term average, moving average, obviously is just a small space there. So moving back to that AUD New Zealand, and in the meantime I'll look at some comments. Darshan is saying we have to discuss the move on the dollar Hungarian Florian, I think it is, not sure. And of course he's joking there, so but I'm sure there's a lot of movement on that. Yeah, I know Darshan. Darshan's kidding on that one. Could be very interesting though, you never know. I've never looked at it either, but who knows? Maybe the euro AUD moves like a train, so I'm sure there's a lot of movement. No, kidding. I don't know. Probably not. Probably something like the euro Swiss indeed. Now, Darshan is saying that the NOK, the Norwegian crown, moved a lot. That one definitely, euro NOK, is something that I've seen traders trade indeed. Kath is asking where I draw trend lines, or when do I draw trend lines through the candles as opposed to connecting the wicks. I would do that if I could have more touches, and as long as there's no bigger part of a candle outside of it. So something like this, when the candle, just a small part of the candle body is outside of it, that's okay. Even if a bigger part of the candle would be out of it, it's okay. If it all depends, and there are kind of a lot of rules on that. It all depends if I can have a trend line that has 3 hits. By cutting a bit of price action, I would do so. And with a bit, I mean if it cuts through a wick, that's no problem. Even if it cuts through a bit of a candle, it's no problem. Even if there could be maybe one entire candle above it, it's getting iffy, but still maybe possible. If there's several candles above it, then then it's probably not the best one. I would also do so if there's a potential of having more hits. So if one trend line would have 6 hits and another would have 3, I could keep both trend lines on. Probably, in most cases, one would be shallower and the other one would be steeper. If it is 6 hits, though, I wouldn't mind to have one of those hits, or maybe even 2 of those hits, where price is above that. Once again, if it's a wick, no problem. If it's a part of a candle, no problem. Same things apply for that as well. So as long as I can get more hits, or as long as I can get 3 hits, which is always, I'm looking for 3 hits because that's the confirmation of a trend line. A 2-hit trend line really means nothing in theory unless it gets that 3rd hit. I mean, it's still a potential good spot. I'm not saying that 2-hit trend lines are not worthless, but 3-hit trend lines are a lot better. 4-hit trend lines are okay. In fact, 3-hit trend lines are the best. 4-hit trend lines are good. And if you have a trend line that has too many hits, then the breakout trade is also becoming a bit riskier. A trend line with 6 hits is good to have that many hits, but it's in fact better for a trend channel than for a trend line. Trend channels with as many hits as possible is great, because that means that it's a confirmed trend channel and you're moving that way repeatedly. If you have a downtrend channel, you have 6 hits at the top. Wow, that's an extremely well-established trend channel. If you have a trend line that has 6 hits, well then in fact the correction has probably moved quite a far distance, and a breakout is probably not a with the trend breakout anymore. 3 to 4 hits on the trend line is a confirmed trend line and is most likely still a with the trend breakout. If you have 6 hits, then the chances are that it's not a with the trend breakout, and it's in fact probably a reversal breakout, and therefore a bit more riskier. And most often than not, if it has 6 hits on the trend line, you would see the price already underneath the moving averages. While if you have 2, 3, 4 hits, price would still be above the moving averages. Let me show you that on a chart right here, for example. You can see that 1, 2 hit. The third hit here, for example, if we would do something like that, was still above the moving averages. The fourth hit is still right at it. The fifth hit, you can see price is already underneath the moving averages. Well, the fourth as well, by the way, but you can see the fifth, the moving averages are already crossing each other. All right? That's the difference. Often enough with the second hit, price is bouncing off the moving averages. With the third hit, it bounced off the long-term moving averages and is about to break the short-term moving averages. The fourth hit, the short-term moving average is already pointed downwards. The fifth hit, the short-term moving average is already crossing the long-term moving averages. Something like that, roughly. Regarding the Aussie New Zealand, I think I'll just wait for that lower high at the moment. Anyhow, it hit the 50 fib and it moved away from there, so my decision moment is gone. If you have any follow-up questions, Kat, let me know, okay? Today or tomorrow, no problem. So I'll just wait for that. I couldn't pull the trigger at that moment. I was too indecisive, but I will still keep a lookout if it does retrace to the 786 and gives us a lower high eventually, maybe, at some point. The Kiwi is still right at the breakout spot. So as you can see, we did get the pullback to the trend line, and in fact, if you look at the 1-minute chart, we moved back to the band and bounced off the band. So that would have probably been the ideal entry, as I already said a while ago. But anyhow, just a few pips difference. So, with that said, I think that, oh yeah, pound odd. But that's, again, one of those pound trades. But once the pound news event is behind us, this is a trend line break also I was keeping an eye on. Kind of like also a triangle or maybe bull flag, depending on how you look at it. But a break of that to the downside would be another opportunity, right? Something I wanted to mention as well. Anything else? I guess that's about it. Basically, to sum it up, breakout opportunities on the euro dollar, pound dollar to the upside, maybe the odd dollar as well, New Zealand dollar. Potentials on the euro CAD, pound CAD, odd CAD, euro yen, dollar yen, pound yen, pound Swissy, odd New Zealand, pound odd. Let's see if anything really would be as good as I hope it would be. But that's the summary. So that's what I'm going to keep an eye on today. And see if we get any bounces on those New Zealand's, yens, dollars, CADs, etc. So that wraps it up. If you have any questions, let me know. Otherwise, I will see you hopefully tomorrow where we take a look at intraday trading. Oh, there's some extra advice here regarding news trading. Wayne McDonnell about both of them actually on Sniper Trade and Bayonet Trade. So for those of you who like that, got some tips there. I'm just taking a look with the Darshana, what was the other one? The other thing, the other book or person you mentioned? I can't find it anymore. Ah, thank you. The other one was Grace Cheng. The Sniper Trade is conservatively aggressive and Bayonet Trade is conservative. And Grace Cheng is 7 winning strategies. Alrighty, folks, I don't see any questions. So thanks for being here, first of all. I wish you all great trading. And oh, the Bayonet, by the way, is like, it's a breakout philosophy, and it's, Darshan is comparing it to a knife in front of a rifle, so sounds scary, but I'll take a look at that. I'm curious. Wishing you all a great trading day and a day in general, first of all. I hope to catch some good breakouts today, and let's see if the 2-to-1 profits would work out. Be careful of the FOMC. If we get too close to that, of course. We'll talk about what happened with the FOMC and the policy decisions made, what kind of influence that has on the dollar, what we talked about at the beginning of today's session, and see how that has impacted our currencies tomorrow. Very curious. And then, of course, we'll take a look at intraday trading as well, okay? Cheers, everyone.